this car is the first EV, of course, for Suzuki, and also this car is designed and developed exclusively for EV. So all the platform and the other, things are all designed new and tested slowly, as you saw today. So that takes time.
You want to become the largest EV player, EV manufacturer in India. And what's your take on the competition which is already there, Tata, Mahindra?
Yeah. So they are doing good things for India, and also EV is a good. So we'd like to do this for India, but also all of our network across the world, they are also waiting the arrival of EV. So this car is not only for Indian market, but for more than 100 countries and regions of the world. And we are going to start production in the next spring season, and we will, shipping to whole world from India.
And you can talk about the range and the price also. What price point? Because customers are waiting for price as well.
The range, as you said, this is 100 kilometer plus from this car, and that will eliminate customers' anxiety for the range. Plus pricing. Of course, we have been studying the pricing, but we can't tell you right now. So please, expect what is the price range for this car when we are going to start selling in Indian market.
And how is it going to take forward your partnership with Toyota as well?
Yeah, Toyota and Suzuki, we are enjoying very good, collaboration between us. But as far as Toyota's, strategy, I'm not in a position to talk. So please talk to the Toyota.
One last question on the Indian market and Maruti Suzuki's plans. It's the beginning of the year. What are the plans of the company for the 2025? About the whole market, small car will remain focused. More SUVs will come.
First of all, 2025, the year of EV for us. With this, EV Tara, we will do big thing in India. Plus, lots more things will come. So please expect.
Well, all the focus today is in New Delhi at the Bharat Mobility, and you just heard the Maruti Suzuki chairman as well talking about as to how they're aspiring to be number one in the EV market, which is, well, believe you me, extremely fast and furious and competitive, right? Okay, but other than that, let's just focus on the market, because after this manic Monday that played out for us, the week has really been quite historic in that sense. While you did see some amount of consolidation play out the past 2 or 3 trading sessions actually, but right now we're down about almost 100 points on the index, and today has been really sort of been dented because of the earnings that you saw. So be it Infosys, be it Axis Bank, they really pegged you back. Reliance did what it had to, but it was a bit of a seesaw kind of situation, with clearly Reliance not the heaviest weight right now. Having said that, Reliance is still the top mover in the Nifty. It's up about almost 3% on the futures. This BPCL, Coal India, Hindalco is the commodity cluster which is actually holding up, but that's not quite the case with Infosys. Purely because of the pre-positioning, the fact that Infi had already run up so much year to date ahead of its numbers, that stock is really getting slammed, still lower by about almost 6% as we speak. Similar is the state with Axis Bank. The retail portfolio has really gotten dented this quarter, and that stock's still lower by about 4.5% as we speak. And it's quite, curiously rubbed off on the other private banking majors as well. Look at HDFC Bank, that's also down about 1%. Kotak is down 2.6%, and that's pretty much the case with one of the blue chips of, or rather bluest of blue chips, that's ICICI Bank. That's also lower by about 2% as we speak right now. Other than that, this Kalyan Jewellers once again getting slammed, 5.5% lower. Policy Bazaar has been a laggard for the past 2 trading sessions, down another 4.5% today. And those, typical plays that you see run up ahead of the budget, your infrastructure, real estate, railway names, they are the ones which are really seeing a leg up, especially railways for a second consecutive day now. Names like, RVNL, IRFC, they're all holding up. There's also Hudco up 4.25%. HAL is up 4.6%, IRB Infra is looking up, and so is Lodha from those beaten down levels of Monday. But let's welcome on board Rajiv Agarwal. He's right here in the studios with us and figure out what he's making of not just India, but the globe as well. Rajiv, so good to have you here in the studios.
It is
welcome
wonderful.
to India.
Thank you. It's wonderful.
So what's the chatter like? Because all the action seems like is happening in the US right now, and it's really the dollar which is sort of pulling the reins for emerging markets also.
Yeah. No, I think it is the fact that Trump inauguration is next week will be interesting to see how the policy measures that everybody has been talking about will start showing up. And in fact, Trump is talking about weaker dollar. So the fact that the dollar is running up and yet Trump is trying to encourage more exports out of the US, it will be interesting to see whether Trump policies impact the dollar strength that we have been seeing for the last few
But is
months.
it going to be as simple as that? If dollar eases off, will the money move to emerging markets like India? Or do you think India's problems with sort of slowing growth, inflation challenges, and earnings getting dented as well, that also will have a role to play?
Absolutely. I think all of that will have a role to play. My view is that Indian markets ran up a lot, and we will see some consolidation, which is what we are starting to see now. In addition, I do think that it is important for us to ensure that, well, not for me, but for the markets to think about where the earnings will be going forward. And from an earnings perspective, I think the economic growth has been very weak. And so unless the economic growth starts, and one of the drivers would be the government and the government capex, which has been very weak. From whatever I'm seeing and listening to some of the politicians talk about it, my expectation is capex should start picking up. And as that picks up, I would expect Indian economy to do well and the growth to come back again on the earnings side.
But Rajiv, the major question is that when do you expect the Indian economy and especially the corporate earnings growth to pick up? And given that you are anticipating a weaker dollar, tell us what are the sectors that you are eyeing on, because it was just a while back we were chatting about that long-term growth story.
Yeah.
So where are the opportunities?
So actually some of the opportunities in my mind are the sectors that we were just talking about, which I have been beaten up, which is banking and finance. I have been a big bull on that. One of the reasons for the weakness has been the stress that has built up in the last few quarters, as the MFI has not done well, the personal loans, the credit card, all the unsecured loans have not done well. And today we saw Axis Bank being down so dramatically. So clearly that is an area where the prices have come off significantly, and they have come off because the earnings have been weak. But I would expect that over the next few quarters, as that weakness tapers off, the earnings will once again become visible, and so will the opportunities and therefore the growth in the prices. And that is what we are looking forward to. We think India as a story is a very strong credit story, because there has been weakness in credit for the longest in terms of the opportunity of using credit and growing the economy. And as the capex comes up, as the monsoon has been good, we would expect that the rural will be stronger, and that will drive all the growth across the economy.
But does that make you hesitate? Does that make you hesitate a bit putting fresh money right now?
Actually, it's interesting, when the markets become weak, that is when you want to put fresh money. And what has happened is Q4 of last year was very weak, right? The Nifty is down 8-9%. And so, in fact, in Q4 and even in January, we have put some more money to work, because that is where we are finding bargains now. Because when the narrative turns negative is when the opportunities become more interesting to us. So that's how we are looking at it.
Sure. But Rajiv, to say, the question is, do you ride on the same horses when it comes to financials? Is it still going to be private banks and HDFC Bank and ICICI Bank? Or would you look at diversifying to NBFCs, or for that matter, even insurance? I mean, look how strong the numbers were from HDFC Life, and I can see SBI Life numbers as well flash on the screens. The net premium income has jumped up.
Yeah.
And I was just looking at the PAT figures as well. They're significantly higher than what the street was anticipating at 557 crore rupees, I think. Those numbers look quite okay. We will, of course, have to deep dive, but I'm just looking at, optically what the numbers are, throwing up right now. The stock, of course, ran up, saw a rub off from HDFC Life's earnings, and right now as well, you can see a climb up on SBI Life. So do you diversify now and spread your legs when it comes to the financial space as a whole?
Yeah, no, so I think the private banks have been a long-term story, but maybe they're better values in the NBFCs and the MFIs. And the reason is MFIs, some of them, that if you look at, they have been beaten up very, very badly. So, I mean, I will give you some names. Obviously, these are not recommendations. But if you look at like Spandana, it is down 60% in the last 3 to 6 months, and we own it. So it is not recommendation, full disclosure. So I think some of them have come down dramatically, and they have come down because the business have been very weak. So the question then is not what happens next year. We are not looking even what will happen next year, because we think a few years out, they could become interesting. Because yes, the weakness is not going to go away in a quarter or two. We think the weakness will go on possibly for all of 2025 in terms of getting back to the old numbers, right? Because the the bad credit will play through the quarterly numbers. But we think by end of 2025, a lot of that pain would be addressed. And therefore, you would then start seeing in 26, calendar year 26, you start seeing some more improvement in the results, which will then reflect in the stock price. So one of the ways that we differ from what the street does, and which I think is very important, is that we don't try to make a decision based on what is happening now or in the next quarter or even the quarter after next. We try to look a few years out. And what that helps us do is be differentiated in terms of our viewpoint versus what the market is. Because markets are much more focused on very short term, which is 3 to 6 months. We try to take 2 to 3 years out view. And so MFI, now going to the insurance sector, I think that sector clearly has a very long runway. The question then is whether that long runway is something that we can benefit from in terms of the stock price. Because that is where we have to say what the earnings growth will be. And in general, what at least we have found is that the earnings growth of the insurance sector is pretty well baked into the price that the stocks are trading at. So even though they might have come off some, we feel that at this price, they're not as compelling as something that we are seeing in the NBFC and some of the smaller banks.
All right, Rajiv, great to know your take on the MFI space. We'll try to take this discussion forward, but for now, viewers, it's time to step into a very short break. Don't go anywhere as we come right back. More experts joining us on the other side.
Back with closing trades, still in conversation with Rajiv Agarwal right here in our studios. But let me quickly, welcome on board Naresh Mirani as well and figure out what he's making of this volatility, if you will, in the markets. And Aditya Agarwal as well joins in. Gentlemen, hi. Welcome to the show, both of you. Naresh, afternoon. What is it that you're making of the market move today? I mean, of course, today is a big function of the way, the tug of war between Reliance on one hand and Axis and Infosys on the other hand is playing out. What's that telling you about the Nifty structure?
So the Nifty is down, the bank Nifty is down 1.5%, Nifty is down 0.25 to 0.5%. But when we look at the broader markets, we have advances greater than declines. You have the mid-cap index barely a little positive, your small cap almost positive or on the flat line. So the breadth is much better than what is happening because of the few heavyweight numbers. And this is what should continue for the next 2 weeks, wherein we keep seeing volatility due to results. And there would be, big gap ups and gap downs on numbers. But overall, the broader market is still looking good. And we are shaping up for a bounce on the indices as well. Globally, we are hitting new highs on DAX and European markets as such. So structurally setting up for a bounce.
Setting up for a bounce. But hi Aditya, very good afternoon. Welcome to the show. Help us understand what are you looking at right now, because there's no select pocket that is showing great movement, at least for today, but it's the metal pack, at least what I can spot. Stocks like Tata Steel, Hind Copper, they are doing well. And like a while back, Rajiv was also highlighting that the commentary that we have till now is suggesting for a weaker dollar. So do you believe in any of these metal stories? Any stock that is looking attractive right now?
Thanks for the show. Good afternoon. There is a bit of a pop for sure in a lot of these metal stocks, Tata Steel, JSW Steel, Hindalco, NMDC. There is a bit of a trading pop, but this is the first day of recovery of sorts to say in all of these stocks. I would give it one more day at least and see if the trend is intact and we see a follow through buying in trade tomorrow, maybe Monday, in these stocks, Tata Steel, JSW Steel, NMDC and Hindalco. All four stocks for me looks like there could be a short covering rally, but I would wait for a confirmation on Monday. The two stocks that I would particularly bet on, Tata Steel from here on, I think can test levels of 140 on the upside, support on the downside at 145. JSW Steel, I think, again, is a candidate for a good short covering rally, can test levels of 960 on the upside. Talking of NMDC, I think this is one stock which is up back-to-back 2 days. Yesterday also it was up on decent volumes. So 72 could be seen on NMDC as well. So the three stocks I would keep a close eye on, but take a trade on Monday. Today, I wouldn't be too interested in taking a trade in metal, just say.
Okay. Rajiv, just coming back to the discussion that we were having, other than financials, what's looking interesting where you do have that kind of growth visibility and now with the recent correction, some valuation comfort as well?
Yes, I think one area which I feel is very interesting still is capital markets. So you look at clearly as the market has pulled back, some of the wealth managers, right, have actually also pulled back. But the fact is, Indian capital market story is going to continue for a very long term. And again, going back to my comments of saying that, listen, in the short term, we are not really focusing as much. But if I look a few years out, I think the capital market story, the amount of inflows that we are getting will continue. And therefore, and Indian capital market players are quite consolidated. So most of that opportunity will show up among these players, right? And so that is one interesting area. I think renewable energy is another interesting area for us. We have been in that space for a little while, and we think renewable energy, because it is quite cost competitive versus the traditional form of energy, I think will continue to be very interesting, not only from an environment perspective, but also in terms of the cost competitiveness. And so I think that is another area. And then,
but sorry to interrupt you there. That's a very big supply chain. What within renewable energy is looking good?
So I think, so in renewable, there are two ways right now, either solar or wind. Within that, we like wind more than solar. And the reason is solar has many, many players. And also the ability to get into solar is much more easier, right? While wind takes a lot more time to get certified and to be able to put the wind turbines out there. And so that is what we like, because we think that in wind, if you look at the wind energy segment, there are only a few players. So we like to be invested in segments which are consolidated and where the entry of new players is not that easy, because that is what will allow us to make good returns over time.
All right, that's interesting to note. Maybe wind, the counters related to the wind renewable energy is something that Rajiv is liking at this point in time. But with this, viewers, let's do one thing. Let's once again slip into a very short break. But as we look at the markets, there seems to be a bit of a recovery from the day's lowest point. What we are spotting on Nifty as well as Bank Nifty. But don't go anywhere, more action on the other side of the break.
Back with closing trades, right here on 18 now. Let's just see where the markets are settling in at. That little bit of a closing volatility definitely playing out. It's really been a manic week. I think, today doesn't really do justice. We should play out the week-to-date chart or the last 7 trading sessions, because that will give you the true picture of what the market has been through, starting off from where we left it off last week to where Monday was when you saw that big gash. And then from there, you've seen a little bit of a recovery played out, but still we're down about 224 points for the week gone by. And I think more stark would be the picture for some of the other sectoral players like a Nifty Bank, for instance, even real estate, which really got clobbered on in Monday. And that's, 2.5% lower for the week on the Nifty Realty Index alone. But we still got Rajiv Agarwal right here in the studios. So Rajiv, financials clearly is that big theme. You talked about renewable energy as well. What else is looking good? Or actually, let me, pose the question in a different way. What is it that you would completely avoid and not touch in this market in India?
Yeah, so I think we actually go a lot by how the stocks are valued. And I would say a lot of the capital expenditure companies, because of this narrative that India will continue to have very long term, like you look at, for example, the TT Powers and stuff like that, where they have just the transformer, all the entire transformer group, they have done very well, because everybody said, well, electricity has to be generated, but the multiples don't make sense. And so our view is all stocks are good at certain prices and all stocks are bad at certain prices. And so if I look at like the ABBs of the world, the real capital NTPCs and stuff like that, they have run up a lot because of the India story. And so our view is market is so big, we don't have to be in all the segments. In fact, we always say that we will concentrate into sectors which are interesting to us. And we are very happy to let go of sectors which we don't find enough value in. We ultimately are a value investor, but that means that the way we define ourselves is growth is a very important part of the value, and we try to look at what the value will look in a few years and then look at our expected returns.
So CapEx is that one theme. What else?
CapEx is one theme. Then you look at the fast moving consumer goods. They have not done well. So it's not like the prices are at highs, but the issue is the growth is very weak. So now, should you still justify a 50 times multiple, which you will have in many of these fast-moving consumer goods? And there was a narrative that no price is high enough for them. Our view still is that unless the consumption starts improving, even these valuations are not necessarily as justifiable. So we would not want to touch the fast-moving consumer goods. We will still not want to touch many of the the place where, you look at the infrastructure boom that has been going on, right? Now, in that, I would say like a metal stocks and stuff like that, maybe there are pockets of opportunities, because one thing we always have to realize is a lot of the businesses are commodity businesses. And when you are dealing with a commodity business, you cannot give it the highest, you cannot take the highest earnings of a cycle and then put a multiple on it, because you know that those earnings won't last, right? And therefore, it is very important that we normalize the earnings, and you say with those normalized earnings, what should be the valuations, right? And so I think a lot of those segments, and 2024 was a great year for the mid and small cap. So you have to be very, very choosy in the mid and small cap, because a lot of those valuations would not make sense to us. Right? I mean, these are small companies and they trade at 30, 40 times earnings on a business which will grow at maybe 10, 20%, but they're very risky businesses because they're small businesses. They don't have the niche that you would expect them to have. So what we try to do is to look for niche businesses which can grow well, very concentrated players, and we think they have good returns on capital so that they can continue to self-sustain themselves. So that is sort of how we look at it.
Sure. What about the entire consumption theme? Because that has always been India's peg point. We did discuss staples, but other than that, the entire premiumization story, is it still a structural story, or do you think when it comes to at least stock prices and valuations, the best is behind us?
So our view is that the premiumization will continue. I think it's a great long-term story. But the question then is not whether the theme will continue, but given the theme and given the current valuations, are they a good stock opportunity? And that is how we are thinking of them. So like you look at the Diageo and you say, listen, it is trading at 60, 70 times multiple. Is that a multiple that I would be willing to pay? And many times it's not about whether the business is a good business, but is the price good enough, right? So it's more of trying to be very careful with where the price is versus what we think the value is. And being conservative, we have to many times exclude some of these market darlings.
Absolutely. But great having you in the studios today. Thank you so much for your time.
Great. Thank you.
Well, definitely great chatting with you, Rajiv, and we also understood the themes that you're working with. But with this, let's move on, and let's also welcome on board Jonathan, who is the Deputy CIO of Westminster Asset Management. Hi, Jonathan. Thank you so much for taking the time out and speaking with us. The big event that the world is eyeing is indeed the Trump 2.0 and the likely impact that everybody is looking forward to. Help us with your understanding that how do you see when Trump takes in charge, how the equity markets can react, because for now what we are seeing is there is indeed a little bit of nervousness. The bond yields are shooting up and there are some concerns on the rate cuts as well. So help us with your take on the markets. How do you see the global markets and the Indian market set up as well?
Yeah, hi, good morning. I think it's, clearly we're all struggling with what Trump 2 will actually look like. There's clearly, we're going through a phase of a lot of volatility and, a lot of people are predicting certain things. One thing we know is, that not all these predictions will be correct. I think, the way we look at it, markets had got a little bit excessively pessimistic, I think, certainly on the bond yield front, where you saw US yields rising up. We've got US mortgage rates now near 7%. And I think that's probably in the very short term a little bit too pessimistic. We are, though, somewhat concerned about the inflation outlook for later on in the year in the US, and that will have an impact on bond yields. But clearly, as you rightly say, none of us really know about the incoming president's policies with regards to tariffs, with regards to the dollar. He's talked about he wants a weak dollar. And certainly, obviously the ongoing sort of anti-Chinese talk, is that going to be really true? So there's still a lot of uncertainty. Clearly, what we do know is it will be different from his first term. The market setup is very different from when he came in previously. Rates are clearly higher, inflation is higher. So it's a very different setup from when he started the last time round. But I think all in all, we remain actually reasonably optimistic for equity returns, certainly in the first half of the year, although we do believe they will be volatile. And markets like India and emerging markets, certainly have come under some pressure for the last few months. We've certainly seen money coming out of the space. Obviously India peaked out quite a few months ago. And yeah, people are increasingly allocating into the US. That said, we certainly maintain decent positions in the likes of India and other emerging markets because we do believe that the longer term structural story is still at play. And we do believe that ultimately investors will begin to switch back their focus on some of the other areas outside of the US.
Jonathan, is there anywhere in India wherein you may have added positions or booked out in the recent correction which played out?
Yeah, look, we've not been very active for some time. I think it's interesting, seeing what happened overnight in the IT space, with Infosys and stuff. Seems a bit of an overreaction to us, but I think it's probably a reflection of a sector that's done pretty well in the current sell-off and a bit of profit booking coming in. But otherwise, no, we're fairly consistent in where we're invested, be it in the banks, be it in some of the IT plays, and also very select consumer plays.
All right, but having a look at some of the movers in today's trading session, then a good rebound is what we are seeing in stocks like BPCL and HPCL at least, and specifically for BPCL, yes indeed there's a news flow, but Naresh, just wanted a chart check on this one because this whole energy and the power theme is doing well, but how do you see BPCL placed at this point? This perk up of almost 2.5%, anything much to read on or just a bounce from the lower levels and no fresh rate initiation?
So for now, the correction has lasted long in this space. So if you look at BPCL from 370, 380, the stock has corrected to 260 levels. This is where it was in February as well as in June. So at these levels, the correction is overdone, could expect a bounce back. But the bigger trend starts once it sustains back about 290, 300. Same is the case with IOC as well as Hindustan Petro. They've seen a correction of 20 to 30% from the top. And crude prices have remained at the same place for the last 3-6 months with a lot of volatility. But at these prices, it's a good risk reward if one has a longer term view.
All right, that's the take coming in on BPCL, but even some of these beaten down names like Asian Paints, they're also seeing a decent perk up. But talking about metals, just a while back, we were having a word with Aditya on Hind Copper as well as some of the other metal plays like Tata Steel, and they are seeing some good rebound in today's trading session at least. But one such stock is also Macrotech Developers, because today there was indeed a brokerage upgrade coming in on this one by Kotak Securities, while they have maintained their target price on this one. But Aditya, help us with the chart check on Macrotech Developers. A lot of these investors have been highlighting that real estate is still a good play to bet on, but technically, how do you see the stock placed?
So like we discussed this in the morning, Shrishti, I think 1200 is a resistance zone for the stock. I would wait it out for this 1180, 1200 zone to be taken out decisively. If that is taken out decisively, then yes, I would look to initiate fresh long here for a target of 1300 on the upside with the stop loss at 1150 on the downside. I think right now it's better to focus on areas where there's more momentum, like your defense, like railways. I think this is one space which is seeing good traction on the upside and likely to continue in the coming trading sessions as well.
On the subject of real estate right now, let's try and understand what exactly is the visibility, at least when it comes to the MMR region. And we've got Astha Chopra, my colleague, who's currently in conversation with Baman Irani from Keystone Realtors. Let's hear out what he has to say.
Already, met with Revenue Secretary and put forth our requests for the real estate industry. Of course, other than streamlining GST and making it a little more friendly for the pockets of our purchasers, we've asked for putting a lot more money in the hands of our purchasers itself. Real estate is one of the drivers of the GDP. We are close to around 9 or 10%, and we're going to be close to around 20 to 25% of the GDP, given that 250 different industries and companies rely directly and indirectly on us, and then the services sector, and we're also the second largest employer after agriculture. So what we've asked for is to continually grow this industry. It's a make in India, make for India, and a homes for all, which is our Honorable Prime Minister's vision. We've asked for a few very simple things. One is the simplification of GST itself, like I told you. Second is to be able to simplify the holding norms, in the sense that when an home buyer rents a flat, he gets a set-off against his income tax. But if the same home buyer goes and buys a home, he has a ceiling as to how much he can kind of, set off against his income. I think it'll be very, very a good move on the part of the Finance Ministry to allow for a purchaser of a home to get a huge relief with regards to his taxation. Why do we say this? Because indirectly the developer is paying a score of other taxes, including GST, including stamp duty for the state, including employment of people and the services that he provides. This will lead to a big fillip. Though income tax may come down a little bit, but this is a big fillip to the overall growth of the industry and thereby growth to the GDP as well.
Okay, that's the take coming in from Macrotech developers talking about their budget wish list from the Finance Minister this time around, representing the real estate sector, of course. But Jonathan, just coming back to the point that you were making about as to how consumption in India is is a theme that you believe in. A lot is happening there as well. Like we were just speaking with the previous speaker before you joined in as to how the entire premiumization trend and urban consumption really has maxed out when it comes to valuations, at least. And rural is something which is really seeing a slow down, something that can be very well felt within what's happening in the staples category. What is your overall thought on the entire consumption play here?
So yeah, I think we pretty much agree. It's undoubtedly a fantastic longer term opportunity. But as your previous caller said, and as you just mentioned, a lot of the good news, if you like, about the opportunity is factored into some of the stock prices. However, I think the stock prices traditionally and for many years have traded on the expensive side. But these are compounding type companies, and over the longer term, if you can pick them up in a period of volatility when they've come off of it, it's generally paid off. So we're comfortable with the space. We understand there will be cyclical swings up and down between the urban consumption and rural consumption, but ultimately the direction of travel is what's important. And clearly, we do see rising consumption, premiumization ongoing as a story for India.
The take coming in on the consumption basket. But Naresh, this particular week has been decently well for all these telecom players, and specifically for the tower company. Indus Tower is one of those plays when just today we had the commentary coming in from Minister on the addition of the towers going ahead. Any stock within the telecom space that is still looking interesting to you? Because Bharti Airtel has done decently well. Indus Towers even today is holding up gains of almost 2%, and even Vodafone Idea, definitely a lot of news flow around as well, and the stock is now above that 8 odd mark. Okay, 9 odd mark at least. But any stock that is on your list or that still look attractive to you?
So it is Bharti Airtel, which has been consistent, has not been a stock which has corrected with the markets. The stock has held on above the 1550 mark, still just 10%, less than 10% from the highs. The stock has been consolidating for the last almost 1 month around that 1630 mark. That could break out about 1670. Looks promising at current levels. The risk reward is good. This could be the first one which could hit a new all-time high in the basket. The second is Indus Towers, which has made a multiple bottom around this 320 and is on verge of a breakout about 370. This structure looks positive for a move back to 440 levels. So like Indus Towers one, and second would be Bharti Airtel.
Note, Naresh, let's have your BTST trades as well.
So looking at a bounce back trade in Coal India, which has corrected from 500 plus all the way down to 380s. Stop loss at 383, target price of 400. Second is a buy on Bharti Airtel, very close to a breakout point now. Stop loss at 1615, target price of 1670.
All right, that's the BTST idea. Okay, Bharti Airtel, there you go, Naresh. But Aditya, help us with your BTST ideas then.
I've got a couple of buy recommendations. Shrishti, the first one is Motherson Sumi stock has seen a significant correction from 210 odd levels, taken support at the neckline of a breakout, neckline of the trend line breakout. From there, it's bounced back. So for a target of 162, I'll be a buyer in Motherson Sumi for the stop loss at 145 on the downside. The second stock is BDL, Bharat Dynamics. The entire, as I mentioned, defense space is buzzing around, and I think BDL within that is looking very attractive to me. So at current levels, they're a buyer in the stock for a target of 1450 on the upside, a stop loss of 1200 on the downside.
All right, those are the two ideas coming in from Aditya. Bharat Dynamics, that stock is already up 6%, but still having confidence in that. And also, Motherson Wiring is the other counter that I believe Aditya, all right, Samvardhana Motherson is the other counter that Aditya is looking at this point in time. But Jonathan, help us with your take on some of these beaten down sectors and probably where the valuation did become a bit of a challenge, and sectors like defense as well as railways. Of late, we have been seeing a lot of these announcements once again trickling in with respect to the new order flows, and everybody is just highlighting the kind of opportunity that lies ahead for these companies in terms of growth. But what's your take? Any of the sector or any play that you like at this point in time? Are you really looking into this theme again?
Yeah, I think, what we find is we struggle. So defense, absolutely, that's a fascinating area. We can all see where spending is going. And obviously, domestication of the defense industry in India is a massive push that's been ongoing for some time. The problem we've had is finding stocks that have a significant amount of exposure to the sector without other related or non-related businesses, that aren't necessarily SOEs and that are growing the business and also got a lot of runway. So it's an interesting area, but we've always struggled a little bit in finding counters in that particular space. That said, the broader market, you're quite right. I think since the indices have come off since the last quarter, where most of the market was looking quite pricey, we're beginning to see a few individual counters starting to look quite attractive again. We haven't done anything as of yet, but certainly valuations in certain pockets are beginning to look interesting again. And I think it's also quite interesting that India, there's a lot of money that flows between India and whether people like China or not. So even though the Chinese story is still a little bit doubted, India's been coming off. So I think we've seen foreign money coming out, and that has led to some pockets of value beginning to re-emerge.
Right. Okay. Jonathan, stay with us. A lot of earnings as well, and in the thick of those. So let me take it across to Anisha and find out what to anticipate from Wipro and Tech Mahindra now that Infosys also is out of the way. Anisha, what can we expect?
The street will be watching out for Wipro as well as Tech Mahindra, which come out with earnings later today. For Wipro, the expectation is that it's going to be in the middle of the range that they had given, because earlier, remember, the company had talked about a -2 to flat kind of performance. We're expecting that the revenue will be flat in terms of the rupee revenue, so that the number comes closer to 22,180 crore. In terms of the IT service revenue, in terms of dollar revenue, we're expecting a decline of around 1.6%. The number is expected around 2,620, while the constant currency is expected to see a decline of around 1%. The margins might be stable just around that 16.5% mark. 2 months of wage hike impact is going to be there, because the wage hike was actioned in September. So we'll see that, and that's the reason the margin is expected to come off to the levels of around 16.5%. Profitability is expected to be down by almost 7%. Overall, there will be cross-currency headwinds to the tune of 70 to 90 basis points, and maybe BFSI as well as Capco will remain soft. So that's something that we're watching out for. As far as Q4 is concerned, we're expecting the company to guide a growth of anywhere between +1 to -1%. Shifting focus quickly to Tech Mahindra, wherein we're expecting that the revenue will be up around 0.7% in terms of constant currency. Dollar revenue is expected to remain flat. As far as EBIT margin is concerned, we are expecting an expansion of 60 basis points, so that the number comes closer to 10.2%. That's on account of Project Fructifus that they have undertaken, Fortuous, I beg your pardon, that they've undertaken, and that's expected to improve the margins. Profitability is expected to come off, but last quarter there was a huge one of around 450 crores. So that's why it's not a very like-to-like comparison. The improving deal ramp-ups might offset some of the furloughs, but there will be a 100 basis point currency impact. So that's something to watch out for. Overall, from both the companies, the commentary regarding way forward, the Q4 as well as the FY26 expectations is something to watch out for.
Well, it's Wipro, Tech Mahindra, but guess what? Zomato as well is going to be declaring its numbers over the weekend, and all eyes surely on this one, especially given the volatility that you saw in the stock on Monday and how swiftly that got bought into that low of 220, still hovering around the 250 mark. Of course, it's off from its previous year peak, or rather 52-week highs of 300 thereabouts. But Snehi, tell us what to anticipate from earnings.
Expecting a decent set of numbers from Zomato for Q3. Let's take a look at what the earnings fine print could be. Now, on a consolidated sequential basis, revenue was seen at 5,382 crores compared to roughly 4,800 crores last quarter, which is up 12% on a quarter-on-quarter basis. EBITDA is seen at 266 crores compared to 226 crore, an uptick of roughly 18% on a sequential basis. Net profit is expected to grow 31% quarter-on-quarter, coming in at 230 crores compared to 176 crores in Q2, and EBITDA margin is seen improving only nominally to 4.9% compared to 4.7% sequentially. Now, here are some key expectations. The food delivery GOV is expected to grow at 6% sequentially. For the same metric for quick commerce is expected to be strong, coming in at 15% on a sequential basis. Blinkit is likely to post a contribution margin of 3.7%. And the sequential adjusted EBITDA margin as percentage of the GOV improvement is expected in food delivery and Blinkit as well. Now, here are some key factors to watch out for the days the numbers come out. Market share will be important to watch out for, the market share status in the food delivery as well as quick commerce business. The sequential monthly transacting users and order volume growth in both the food delivery and quick commerce business will be key to watch out for. Delivery charges expansion, if any of the company is undertaking, that will be important to watch out for, along with commentary on any platform fee hikes, if at all. Near-term EBITDA trajectory will be important, and lastly, the net dark store addition for Blinkit and the outlook for the entire quick commerce biz amid the rising competition is going to be some key commentary to watch out for. But well, yes, overall, we're expecting a very decent set of numbers from Zomato for Q3.
Decent set of numbers expected from Zomato, and the stock is also perked up in today's trading session just before the earnings. And talking about Tech Mahindra as well as Wipro, they are showing some bit of weakness, definitely, yes, taking cues from the Infosys numbers. But apart from that, Jonathan, help us with your take on Zomato, given this recent correction. How are you looking at this particular play? Because till now, especially till the earnings that we have seen, there's a lot of excitement when Blinkit will start contributing into the earnings, and this time it's likely to post a contribution margin of 3.7%. Given the great opportunity that is lying ahead, but also the competition that is building up, what is your sense on Zomato, and do you like the stock at these levels?
Yeah, look, if I'm honest, it's not a stock that we've been looking at for some time. I think you make the point about competition. We struggle a little bit with the space, the lack of, a lot of these stocks have, the barriers to entry are fairly low. Clearly, branding is very important, but I think it's still, for us, the space is still a bit young. There's still too much competition that's coming in. And I think until we see the real emergence of winners, it's a space that we're stepping aside. We can find other, areas elsewhere which are a little bit more consolidated, and the winners are a little bit more obvious. So for the moment, it's we have no real views on Zomato or the broader internet space.
Interesting, Jonathan. Great to have you on the show. Aditya, Naresh, we'll let you guys go as well on that note. Let's begin winding up for the week, and it's definitely been a tumultuous one, to say the least, especially after that Monday carnage that played out, and from there, the way we've actually recovered. So net-net, we've managed to decline for a second consecutive week. You've had HCL Technologies, Infosys, these have been ranked underperformers. The mid and the small cap indexes as well have seen a second consecutive week kind of decline. PSU banks, they managed to hit an 11-month low this week, largely led by names like PNB. Metals hit a 9-month low, and energy is now at a 1-year low. Adani Power, Adani Green, these are your laggard stocks. That was pretty much the case with Nifty IT as well, wherein the index hit a 1-month low this week. And the top sectoral laggards were the likes of HCL Technologies as well as Coforge. Realty now at a 9-month low, led by Lodha, Oberoi Realty, FMCG, Pharma, Auto, and even banks, with Axis and ICICI Bank leading the losses. The Nifty Bank closed in at a 7-month low for itself. But Srishti, what about today's trade? How's that looking?
Well, certainly, Aisha, we are closing with weakness, and it's almost over 100 points of decline is what we are seeing on Nifty 50. Below that 23,300 mark, 23,200 is where we are shutting short. India VIX is actually short up, and that's very close to that 16 odd marks, definitely not giving that full charge to all the bulls out there. And even Nifty Bank, thanks to Axis Bank, is down about or more than 700 points right now. If we talk about the strength in the broader markets, that's also not clearly visible. But yes, indeed, in today's trading session, we have seen a bit of a recovery. And at the end of the trading session, the breadth of the market is quite even, Steven. It's some of the energy counters that have done well today. Stocks like BPCL, Reliance, Coal India, they were leading in from the front. And even some of these metal names like Hindalco and Hincopper have done pretty well. But on the flip side, it was the IT bag that was clearly lagging behind.
Well, with that, we're going to wind it up right here on this edition of Closing Trades.